Good morning, everybody. It's Tuesday, June 10th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here: July corn down a quarter at 433 and a quarter. July soybeans were up 3 3/4 at 1059 and 3/4, and July Chicago wheat was down 4.5 at 537 and a half. Yesterday afternoon, we got crop progress and conditions. Corn improved a couple of percentage points in the good to excellent category to 71%, slightly above the 5-year average there, 70%. Soybeans also slightly higher, 68% good to excellent. That was against 67% last week, and 67% for the average. Winter wheat ratings also improved, 54% in the good to excellent category. That's up 2 from last week, and significantly higher than the average of 43%. Also shows to be 4% harvested, which is just up 1 point from last week. So kind of slow there. I think some of the rain was hampering the progress on the harvesting side. And spring wheat jumped 3% up to 53% in the good to excellent category versus 50, but still lower than the average 5-year average of 60%. Good morning, guys. We still got non-threatening weather. Looks to be pretty benign. Nothing in the way of the 2-week outlook looks to be overly concerning. Based on some reports yesterday, some positive momentum with China. I know they're meeting again today. So as per usual, we'll be glued to headlines and what comes out of those discussions. And then we've got USDA report here coming up on Thursday. So I guess with that, Dustin, why don't you give us a few thoughts to kick off the morning, and then we'll throw around the room.
Yeah, I think we're, a couple of things we're noticing. Obviously, the real is one of the things that might be supporting the back end of the market. So Jason and I were talking about this yesterday. The spreads have gotten extremely wide for this time of year. There's only just a handful of years in the last 15, 20 years that the spread would have been this wide at this time of year. And it makes sense. We've had pretty good weather. We were talking 95 plus million corn acres. The price incentives were there to plant corn over beans for a lot of growers during that planting window. So we would expect, all of that weight of those acres, those corn acres, to weigh on the December of 25 contract if we have good weather and we have above trendline yield, especially. And then all those acres are pointing back towards beans for 2026. Right, out of natural rotation. So that's going to keep that D26 corn contract perhaps a bit elevated. In fact, yesterday we hit new contract highs not seen in over a year in D26 corn, 477. So many people are talking about how do we hedge D26 corn? Do we do accumulators? Do we sell it? And actually, I don't disregard that as a bad idea. I think it's when the spreads are this wide, perhaps that's one of the better ways to take advantage of the spread is start thinking about D26, what you can do there. But I would also, kind of highlight many of these other years, that we hit an early low in the spread. A lot of times the market got ahead of its skis. They kind of made the crop before it's made. And while I will definitely acknowledge that right now we're on a pretty good path for a good supply, there are a lot of unknowns in the market still, including trade war, or trade deal, and or how is that weather coming through on 4th of July? We don't have a confidence forecast yet on that.
Sure. Ben, what's on your mind this morning?
I think whenever you make a new recent low like yesterday in July, you always have a chance to dig your heels in and see if it's a place where the market's willing to not take the next leg lower. So I'd be interested in how things work out today, tomorrow. We'll get through with the Goldman rule on Thursday, and then we've got 7 trading days to get to option expiration. Kind of a general idea is it's hard to always pay everyone in options, and I would think that somewhere in here we grab a little bit of footing. But whenever you make a new low, the old kind of a simple 2 to 3% additional is what you'd expect in price decline. So we're at a point where I think the market has a choice of whether it wants to roll over some more here or dig its feet in as it heads into option expiration with quite a few in the money puts, a lot of out of the money calls, and kind of gravitate there. And I know that seems like a little bit of a foreign concept, but the open interest is so big in options. Every day that we get closer to option expiration, things become real futures. So there is an impact there. We'll see how it plays out.
Justin, it's kind of interesting. There were people talking this morning that the funds could be in the neighborhood of 125,000 or so short corn. As we come in for the next 6 weeks of weather and weekends and everything like that. I mean, I know it's pretty benign right now, but it's kind of an interesting market makeup in corn right now for you, isn't it?
Yeah, a lot of comments here, kind of agreeing with some of the things Dustin was talking about. But I think what's really unique about this year, when you look at spreads, just for example, is D's 25, D's 26 got out to almost 35-cent carry, so one of the widest for this time of year in history. And it's in a year where you don't really have burdensome stocks coming in, right? So you already have kind of tight old crop stocks. Now maybe that changes and we find 300 million bushels on the June end of stocks report there. Maybe that's what we've been missing, but it's kind of interesting. Usually in those years you have a big carry in coming in, right? So there's no fear about getting too much coverage. So to have a combination of what currently is a tight carry in and a crop that's 2 inches tall in most areas, to put that at a 35-cent carry, I think is a cart before the horse. Now, what is that reason? Again, do we end up finding that we actually had more old crop corn? I personally think we're whiting out just because things got planted, people are turning bearish. There has been selling of old crop corn, cleaning out bins, freeing up cash, and I think that spread loosening, I think, made DSTs look more attractive. Like, well, if July DC is going to be no good, DST should be 50 under. And it may very well be. I mean, it doesn't take a lot of imagination to see that spread at 50 or 60 under at harvest with a 95 million acre number and good yields. But to Dustin's point, that's a mile. It's, we don't even know if 95 million acres is right. It could be 93, it could be 97. And obviously we don't know what the yield is. So to Dustin's point, I think it's just, you guys, now it's starting to get interesting where you got to start looking at where's the best capital to deploy to hedge farm risk. And if you have a really premium policy in your, especially let's call it the Eastern Belt, that's a good example where yields are, very far from a record at this stage, right? Still guys are still planting corn. Have had some issues there. If you have one of these premium policies where you're, so to speak, deep in the money, like maybe that's where you transfer risk from the 25 crop to the 26 crop. That's an example of where you use that spread because you already have, you replace the coverage of hedges that you might have where you're double or triple hedged in this crop. And maybe you move some money or some different strategies to hedge more of, next year's crop as an example of what you can do in these spreads. Another one, obviously, of on-farm storage, the digital July carry out to 33. So those are numbers that we're talking about kind of going into, contract lows at harvest when you get that wide. Now with, carrying charges and storage rates that are higher, theoretically that, we can definitely go wider. That's for sure. But you got to kind of try to look at what the positives in this market and what, maybe how to position yourself more efficiently because, you get weather scare, those spreads can go to flat pretty quick. Especially with a big fund short, so if you run into something, those can change quick. So I think it's more just kind of money management, really. If you look at like how to manage hedges or how to manage your risk, I think it's just being a prudent manager when you get into situations like this.
Crop looks pretty good. Northwest Illinois so far.
Yeah, it's good. I mean, it's it's kind of been spoon fed. It's been a good start. I still go back to, is this the best start we've ever had in this country? I don't think even close. But it's good enough, for 95 million acres and just a bearish sentiment. Usually I feel like price really dictates how people think about crop size. Mm-hmm. If corn were to rally 50 cents out of nowhere, I think we talk about all the problems in the corn crop. It's just how it happens. Like you won't hear about them if we break. Vice versa, right? It's always all the problems in corn, and then we break 50 cents and then, oh man, this stuff's really looking good. So I think
Ben, maybe
the
Ben has
attitude-
to host in the East, maybe Ben starts hosting in the East.
Oh yeah, right. So, no, but I think it's a rather normal start. I mean, obviously if the weather stays, rainy every 2 or 3 days and stays cool, I mean, it's going to be a good crop, obviously. But we're June 10th. I mean, I know seasonally it's pretty obvious we've had a counter seasonal move. Just so to say like seasonally, this is when we make the highs. Well, we made the highs in January. So like that has really nothing to do with this year. We make counter seasonal moves, a couple times out of 10 years, and this is, I don't know how you can say you're at contract lows and this is the seasonal highs. Seasonal highs were in January this year. And we'll see what happens, but yeah, just be smart with, all the things that we talk about. That's really hard to do. The discipline part about really figuring out where you need to have hedges and the management part, hardest to do in this environment, but I still think it was prudent.
Oh, very good. We'll move quickly over to livestock. It's pretty exciting over there, Rylan. New contract highs for fats and feeders and sharply higher cash trade in the hogs. So I guess give us a few thoughts as we started the week here.
Yeah, still more of the same. It's a cash-led market, or at least at this point, there's just no slowdown there at all. I mean, we haven't seen too much as far as bids, asking price, but overall, higher beef prices this week, new highs in choice. The choice is up $2.17 at $367.25. Select up $2.20. So you just got good news all around. It's just really more of the same. It's just how high are packers really willing to pay right now. But we did see the first notice day kind of come and go here. We're now in delivery for the June contract. There were no new deliveries, but the oldest long through 11/06/2024. So we wouldn't be surprised to see the basis start to converge, to narrow up here against the June. But what does that mean? Does it mean futures have to rally, pretty sharply here to kind of catch up, or do we start to see things start to level off here? That's a good question. We're just kind of watching it right now, but it seems like there's still quite a bit of optimism, just led by the beef. Typically, we may see a seasonal top here in beef, but like we said, as of right now, there just has not been an indication. There's sky's the limit at this point. We did see a little bit of liquidation here in the futures yesterday, a little bit in the August as well, but nothing really to write home about. So overall, just still kind of an optimistic tone in cash and cutout, and just kind of watching what happens this week. And on the hog side of things, yeah, cash is up another $2.67 yesterday. Just a lot of, I think, overall demand optimism, hearing rumors and chatter about disease pressures. Still kind of waiting to get more kind of details surrounding that kind of stuff, the regions that it's really impacting. But overall, you can just kind of see it. New highs for the move here in the hog complex, new contract highs. So overall, the pace is still pretty strong. It kind of feels like the pork market's still following the beef market at this point. So if there's big changes there, wouldn't be surprised to see, a little bit of weakness kind of trickle in. But overall, just still good news all around.
Hey, Rylan, just real quick, did I see the story right? I don't know if it was correct, but another student got arrested for bringing in pathogens from Wuhan, China. And it was screwworm.
I don't know the details of that. I have seen several stories just recently regarding, students getting busted with biological, samples.
It's all in Michigan, Dustin. So maybe like lock that down.
Yeah, raid your place, Dustin.
I've been feeling that well lately.
Yeah, I mean, I like I said, I don't know too many of the details. I don't know the credibility of those articles either. I've seen some stuff on X, but outside of that, I really haven't seen anybody raising too many concerns outside of that. So I don't know if it's just a one-off kind of issue, or if this is going to be a growing trend that, biosecurity measures need to get tightened up, for everybody.
Yeah, it's terrifying.
You should be able to bring screwworm in your suitcase.
Yeah.
No, I wouldn't think that's advisable. It was interesting though too, Justin, along those lines, and it was kind of nice to see that CFTC is investigating those hog rumors cattle rumors from Missouri from last week. So maybe a positive sign that they're done with this BS news.
Good.
stuff.
Needs
you
to
know?
happen. Dissemination
so.
of false
It's a lot.
information is a big deal, in this business, and I think they should crack down on it for the most part. But we'll see what happens, I guess.
I'd like them to get that guy to, and then maybe it can spill into some of our stuff, because there's plenty of instances in grain markets we could go look at too.
Oh, absolutely.
But,
Yep.
no, very good. Anyway, just coming into the open here, July corn down $0.015 now, 432. July soybeans are up a couple at 10.58, and July Chicago wheat down 4 1/4 at 5.38 is the last. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with the AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.